Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, the stock market, right? We came down 10% on the S&P and then we rebounded 5%, right? We came right up to the 200-day moving average and we got rejection, right? We got rejection. That's the first try. Same with the NASDAQ. The QQQs right up to the 200-day moving average got rejection. Now that's perfectly normal. They're going to make another run at getting through the 200-day moving average and see if they can stay there. Now, if they can stay there, I do think they're going to push this up, probably up and retest the recent high, maybe even push it up to a new high. That's just my take, right? But it's got to first get through that 200-day moving average, and right now we're getting rejection at it. Now, I do expect the stock market to come in a lot. I expect it to revert back to its mean. Now, everything reverts back to its mean eventually. That just means it goes back to its long-term average. It goes back to what is normal. Now, okay, you got the Buffett indicator out there, and you got, well, it's the stock market value compared to the GDP. And right now that's at 200%. Now, where's normal? Normal's about 100%, right? Right now we're at the record high, and if you get back to 100%, that'd be normal, and below 100% would be cheap for the stock market. But right now the stock market is very overvalued by that particular indicator. That particular indicator would say we're going to drop by about 50%. Now, this is really fascinating to me. George Gammon, okay, that's rebel capitalist guy if you're not familiar with him. Anyways, he came out with his own indicator on the housing market. He takes the total value of that U.S. housing market compared to the total GDP. Now, if you go back to the year 2000, right? Okay, 25 years ago, go back to the year 2000. Anyways, the housing market total value was equal to the total value of the GDP, which was about $10 trillion in the year 2000, right? Okay, well, it kind of has gone up to, well, the GDP's gone up now. Right now, that's about 30 trillion, but the housing market has really gone up. That's at $50 trillion, the U.S. value of the housing market. Now, what is it? That's 160% to GDP. In other words, it's 60% higher than it was back in the year 2000 when things were normal. See what we did, and you can look at 2008, what did we have? We had about, anyways, it was 14 trillion for the GDP, right? 14 trillion, and then you had about 23 trillion for the U.S. housing market. Once again, that's about 160%, the same as we are now. Now, what happened in 2008? 2008, it all came crashing down, right? But they didn't let it play out. It only came down 34%. They started printing money, printing a bigger bubble, funneled $27 trillion into the economy. Totally fake economy we're living in right now. It broke in 2008. All we've done is print money, trying to print over it, right? And that so far has blown the bubble much, much bigger. And that's why the housing value compared to the GDP, about 160%. You drop houses by about 40%, they revert back to the long-term mean, right? Reverting to the mean. Okay, now all the time we always revert back to the mean. No exceptions. Throughout history, you're going to have a market, you're going to have a reversion back to the mean. And a lot of times you overshoot that. So we can come down lower than 50% on the stock market, lower than 40% on the housing market. So if it comes down more than that, that will not surprise me. But we're going to revert back to the mean. We always do, always have, always will. Okay, so what you got going right now is, well, you got the stock market, okay, 100% overvalued. You got the housing market 60% higher than the GDP. So by those total indicators, you're very overvalued in both markets. Now, you go back to the year 2000, we had the stock market bubble, but the housing market was still normal. And then that took off into the bubble into 2008. It started crashing down, and then we started to paper over it by printing trillions and trillions of dollars. Okay, now today I want to talk about, I want to talk a little bit about a trade that I think is probably the trade of my lifetime. Okay, now once again, it's going to reflect gold. Okay, now you got gold valued about, I'm just using rough numbers now, it's called $3,000, right? And you got the Dow Jones, it's valued at, well, it's about 42,000, I think, maybe even 43,000. I could lose track of that one, but 42 or 43,000, right? So you got about 14 to 1, 14 to 1, right? Now this ratio is going to become 1 to 1, going to become 1 to 1. You see, they've both been going up together. The gold's been going up, but the Dow's been going up right with it, right? Unlike the housing market's been flat. Gold's been going up, so the housing market has already crashed in terms of real money. It's down 40% in terms of gold, right? It's come down. Billy Bob, he sold 22-ish, got out at the top, put his money into gold. He's 50% ahead of the game, right? He could take half of his gold now and go back and buy his house back, and then he'd still have the same amount of gold. See, a lot of people don't get that. They think the housing market being, up here at the record highs, that everything's okay. No, what's happened is they're just losing the value, purchasing power of the dollar, which is keeping your house up there, but your house is crashing compared to real money. In real terms, your house is dropping like a rock. Now, will it happen in nominal terms? I don't know that it will. You see, maybe they just keep printing money to keep holding them up here. Now, here's the thing. Okay, you got the gold rate, gold to the Dow, right? About 14 to 1 right now. And I say that's going to be coming in at 1 to 1. Okay, now where will that be though? That's the question. You see, you don't want to go short on the Dow Jones because maybe they meet 1 to 1 up at 100,000 each, right? If we hyperinflate, that's very possible. 100,000 each. Or maybe the Dow drops down to, well, I don't know, down to 10,000 and you meet gold at 10,000, right? But it's going to become 1 to 1. You see, they've been going up together, but right now they're starting to diverge. And where they start to diverge is what makes this such a fabulous trade. You see, gold is continuing to go up, right? Okay, so it's keep going up this year over 10% already. What's the Dow doing? Well, it's not going up. It's come down, right? Okay, so it's going down while gold's still going up. So they're starting to diverge, but they're still right there at 14 to 1. So when it becomes 1 to 1, you can transfer the wealth from all those people in the Dow Jones, all those people in the stock market. The wealth would transfer to you if you're the holder of gold. Okay, does that make sense? Does everybody follow that, right? Dow 14 to 1 with gold right now. Okay. And been going up together, starting to diverge. Soon they're going to reach 1 to 1. When I say soon, this is not going to happen tomorrow, but it'll play out over the next, let's call it 4 or 5 years, right? It's going to play out, You're going to see that Dow coming. Well, maybe it goes up and they meet at that 100,000. That's a possibility with hyperinflation. But this, I call it the trade of a lifetime because it only happens once or twice in your lifetime. Now, okay, I'm an older guy, right? So you go back to 1980, that's where I saw it the first time, but I wasn't smart enough and I didn't know how to play it. But now as I'm older, I'm going to get the chance to see it again. Well, if I live long enough, right? I think I got another 4 or 5 years in me at least. Let's hope, knock on wood, right? Okay, but anyways, they're going to go 1 to 1. Now, okay, so how do you capitalize on this? Well, you start to get real money. Now, is gold the best trade though? Is that the best trade? I say no. I believe that silver is the best trade. Got gold at 3,000, got silver running about $34, $35, right? And now they come out of the ground at a ratio of 7 to 1. For every 1 ounce of gold, 7 ounces of silver come out of the ground. Used to be 14 ounces of silver, but as you have to dig deeper, we mined all the top silver off. There's silver floats up to the surface. As you have to mine deeper, there's less and less silver to be mined, right? So it comes out of the ground at 7 to 1. So right now with gold at 3,000, just divide 7 into that and you will get a number that's well north of $400. But yet today we can get it for $35. I mean, this is incredible to me. This is the trade of a lifetime. Yes, gold, I believe, is going to go 1 to 1 with the Dow Jones. I believe that. That's my take. You do you, right? Yeah, I do me. But this is what I'm doing. Silver is at this ratio of 90 to 1 against gold, right? 90 to 1 almost. I don't know the exact number. I'd have to do the math on that. Let's call it 90 to 1. When it really should be 7 to 1. So you got gold going going against the Dow and you got silver going against gold, put silver in the catbird seat. Silver is the trade of your lifetime. The trade of your lifetime. This is an opportunity. Now, I know a lot of people are going to say, but Mike, silver's never going to go anywhere. It's just an industrial metal now. Nobody uses it for money. It's going to go back to zero. And that's your take, and you're entitled to that. My take is it's going to skyrocket. It's going to catch up. It's going to close that ratio. Maybe it doesn't go 7-1. What if it went 10-1? You still got $300 silver right now. What if the Dow and gold meet at 40, 50,000, right? What will that do to silver? Just divide by 7, and you'll see what it does to silver. It's going to make it go up, right? But here's the thing. The United States government, now maybe we got the gold in Fort Knox. Maybe we don't. Nobody knows. I don't know what the holdup is. They've been talking about this for months, ever since Donald and Elon got in there. They said they were going to go take a peek, see if the gold's there. I mean, how long does this take to set up? I mean, obviously the gold's not there. They would do it so they would show you and regain the confidence of the American people. But here's the thing. Okay, the government needs gold to go much higher. Gold at $3,000 is a bargain, especially when it's going to go 1-to-1 with the Dow Jones. But at $3,000, the government needs this to go much, much higher. Now, why is it needed to go much, much higher? Well, what pushes gold higher, right? What pushes gold higher? It's not the gold going up. It's the debasement of the currency. The currency is going to go lower and lower and lower. And they need to debase the currency. And they try to do it without you noticing. They tell you inflation's running at 3% when it's really still running about 10%. They told you it was 10%. People would get mad. They'd bring the pitchforks out. But it's really at 10%. They're debasing the currency by 10% a year. Still doing it, been doing it the last 4 or 5 years, right? You've already lost 50% of your purchasing power just in the last 4 or 5 years, but it's still being debased. And they have to do that. I get the game, right? They got $37 trillion in debt, another $100 trillion in unfunded liabilities. They have to make the currency worthless so they can pay these off, right? If the currency's worthless, they can give you your Social Security. Currency's worthless, they can pay off the debt. They're just going to print it into oblivion. So they have to debase the currency, which is going to do what to gold? Going to make it go higher and higher and higher, right? 3,000 now, 5,000 soon, 10,000 after that, and they're going to continue to debase it. And maybe we do go to hyperinflation. But here's the thing. Here's the other reason they need gold to go much, much higher. And I'm talking 10,000 to 40,000, somewhere in that range, right? Why? Why they need it to get that high? Well, I'm assuming, let's assume, which I don't believe is true, but if we do have that 8,000 tons of gold, they're going to have to back the dollar with it, right? The U.S. dollar. Do you still have confidence in it? I do not. I've lost confidence in it. That's why my money's sitting in real money, real wealth, gold and silver. It's not sitting in the dollar. Yes, I have some. I have too much of it. It's in the banking system, but I keep pulling it out and I stack a little gold. I stack a little silver. But you see what's happening is the dollar, okay, they're losing confidence, right? By their own standards, you can go on the Federal Reserve website and it's lost 99% of its purchasing power. And they're going to take that last 1% away. I think that 1% is already gone. I think our dollar is pretty much just toilet paper with numbers on it. That's my opinion of it. But as long as people still have confidence in it, and I think they're losing confidence by the day, but maybe people will keep taking it as payment. But you see, eventually they're going to have to back it with something real, and that would be your gold reserve. Now, if the gold reserve is accurate at 8,000 tons, well, you're going to have to get gold price up to $40,000 an ounce just to back the currency. Once people go, look at, I don't want the currency. I want silver. I want gold. And at that time, you're going to see them both shooting up so high, it's going to be too late. You're going to have missed the boat. But right now, you got a chance to take advantage of what I call the trade of your lifetime, of my lifetime. I've seen it once before when the Dow was 1-to-1 with gold back in 1980, happened back in 1930, and it's going to happen again. You see, it happens about every every 50 years, right? So by 2030, it should be 1-to-1, which would be about 5 years out. But if you wait to 2030, you might be buying gold at 100,000 with worthless toilet paper where you can get it now for just 3,000. But here's the real trade. Get that silver. That silver 90-to-1 ratio should never be that way. Should be closer to 10-to-1. Comes out of the ground at 7-to-1. I'll give them the benefit of the doubt and we'll call it 10-to-1. Anyways, this is Tall Mike. If you like this stuff, give me the thumbs up. If you really like it, punch that subscribe button and get out to everybody. You guys have a great weekend now. Bye-bye.